Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, this video is for Wednesday, October 22nd, 2008. The last video we left you with was on Friday. Today is Tuesday for Wednesday's viewing. On Friday, we did a video. In that video, I came out, it was midday in the middle of trading. I stopped cold at my desk and I ran in here and I did a video. And in that video, I stated to you traders, I said, look, there is some change taking place. It will be short-lived, of course, but I feel a bullish rally coming and I expect it to go up for a couple of days. I wasn't exactly sure why. The indicators were certainly pointing up. The formation on the S&P chart was pointing higher. But I had mentioned in that last video, I was in a bank and I heard chatter at the bank and people talking how they're just so relaxed now about the banking industry. I had people talking about opening up accounts. I had another person talking about moving their money back into the bank. And I was talking to my son about opening up a bank account for him. And the analysis and the formation and listening to the street. Something made me jump up and run in here and do a video and tell you traders I was looking for some upside. Well, guess what happened? We had it. We had a couple of days rally here, and the S&P got into the 998 level, traders. That's not bad. That was a big, fat rally. Now I am here to tell you that indicators have turned, sentiment has shifted, and I see some more downside coming. So back to the downside from Tuesday night into Wednesday's trading and probably through Wednesday. So what we're going to do in the S&P is we are going to sell rallies in the S&P and sell rallies in foreign currencies. Now, traders, we have been doing videos for you for weeks on end, pointing out to you that European foreign currencies were going to get hammered. We expected that some Asian currencies, the Australian currency, the Canadian currency, we expected them to get hammered. They have absolutely been getting hammered, traders. If you have not watched some of these videos, do yourselves a favor and go back. Take a look at video dates. If I can remember this right, sometime around 8/5, then around 9/6, then again on 9/26. This is the last 2 months, traders. We've been doing lots of videos getting you ready for a smashdown in currencies. Well, as it turns out, those currencies have been hammered since then. We were trading above 147 in euro currency when we started to warn you about a downward spiral coming. We are now down to 128 in euro currency, traders. That's 20 full points on the downside. Australian has been clobbered. Canadian's been getting hit. Many foreign currencies are getting hammered. And we've been telling you in many videos and many classes at the site that we expected U.S. dollars to really explode because of the environment that we're in right now, and mainly because the U.S. governing bodies noticed our subprime problem, noticed our banking problem, went into an interest rate lowering stance right away, and then stepped up to bail out banks and big companies. And you know what? Our country, the United States, happened to notice the problem first, attack the problem first, and has the best possible chance of a currency to explode because it looks like the United States will come out of this terrible market that we're in first. With that in mind, our United States interest rates are very low now. Yes, they could go lower, but there's not much lower to go. The bottom is there. And you have European currencies and Australian currencies, and of course I keep mentioning Canadian. They have a lot more room to lower their interest rates, traders. And when you lower interest rates, your country's currency drops with it, and U.S. dollars usually go the other way. Now, we've been telling you about this since before the moves ever started. We've been warning you since the currency moves got into high gear, and I am here to tell you, do not expect anything different for quite some time. The U.S. dollar is going to continue to climb, and currencies across the globe are going to get hammered because of it. Now, we watched the opposite happen for the last couple of years. U.S. got pounded. Interest rates around the world were getting raised when they really should not have been. And now there's a price that needs to be paid. That's the way economies work. So that price is to be higher dollars, lower world currencies. Is that a great thing for the United States? Well, we were just becoming an exporter nation again. The higher dollars won't help, but it will attract lots and lots of money into United States stocks and equities and bonds and money markets. And as time continues and the dollar continues to rally, you can expect that the U.S. market will do better. For now, though, for right now in this moment with day traders, we are looking for downside in U.S. markets. Traders, when I did leave you with the video on Friday, I told you two things. Don't fall in love with the upside no matter what happens. And that I was using simple trend line analysis along with indicators to come up with the rally in the S&P, and then what we're now expecting is the drop to take place from Monday night into Tuesday and Wednesday's trading. That's what we're expecting, and that's what we expect to see. I think I'm wrong about this. Isn't this already Tuesday?
It is Tuesday.
Wait a minute. I'm talking Tuesday night for Wednesday's viewing. We expect that the S&P will drop down on Tuesday night into Wednesday, and maybe a lot more by the time the week is over, traders. Don't be fooled. We only had a quick upside spurt. Remember I told you, it's a little peck on the cheek of the upside, not to fall in love with it, right? Well, especially in this market, do not fall in love with any of the rallies that you see. They will be short-lived. There is a lot more room coming on the downside, traders. Don't forget, you are now just starting to hear ripples of the credit card lenders and the credit card borrowers. All that credit card debt is really starting to pile up, and people are running away from that like they did with their subprime mortgages. That shoe still has to drop. There is also the commercial real estate shoe, and that one's coming too, traders. I kid you not. We are not out of the woods. There's a lot more downside coming. No market ever goes straight down, but the odds are good that if you sell into the rallies when they happen, you sell into that rotation, the downside will be the side that you will want to be on. All right, traders, with no further ado, I have a chart or two I'd like to show you, which pretty well depicts exactly this simple trend line analysis and how we were able to call first the up move and then the down move. All right, traders, let's go look at the charts. I'll be right back to you. Okay, traders, you are looking at a daily bar construction of the Dow Jones Industrial Average. Again, daily bar. On Friday, we left you with a video stating, okay, from this point, we are looking for a bit of a rally, not to fall in love with the upside. In that same video, I pulled out a chart and I drew a trend line like this across the major highs of recent, and I said, the likelihood is that we are going to hit this trend line. If it gets above, okay, you got upside. If it fails, it's done on the upside, and back down, the trend will resume. We went right to that trend line, traders, almost exactly to the tick. Hit that trend line and started to back off on Tuesday. And I think Tuesday night into Wednesday, you're going to find these markets begin to drop. Now I want to show you what the S&P daily bar chart looks like. Okay, traders, you are now looking at December S&P daily bar, and this chart, again, this is the exact chart that I brought before you on Friday, and I filled in the resistance line, and I mentioned to you traders that if we hit that resistance line, again, if you get above it, you got some up move coming. However, don't fall in love with the upside, because if it fails right here, back down you go. Well, what happened? It failed. Traders, look at this. If you could see it up close right here to the exact point. It hit that trend line exactly and began to break down and settled lower on Tuesday. It's already down here, already starting to look like it could be a down day. So simple trend line resistance works really well in conjunction with indicators. When we called for the upside move on this day, indicators were pointing higher. Most of our indicators were pointing higher. Within just a couple of days, they've turned and are now pointing lower. But the interesting thing is that the indicators turned right at the exact moment that we hit the upward trend line resistance area. That I find very interesting, traders, and simple. Remember, keep it simple. Always keep your analysis simple. You will find yourself in a much better trading zone. So keeping it simple, using simple indicators and simple resistance trend lines, we were able to tell you that there'd be a few days that the market would go up and when that would stop. Traders, on our site today, we took $18 out of the S&P, 18 full points. because we hit this area and began to break down. Once it began to break down, I assumed that we were in good shape for a short. We took a short and we had a nice day on Tuesday. Now Wednesday looks to me like by Friday, Wednesday, Thursday, Friday, we could end up all the way down here in the 889 area and hit this bottom trend line support. You hit trend line resistance and broke. Why not get the trend line support and test it and see what happens? Do your own homework on that, traders. Keep it simple and tell me what you've come up with. So, you see those charts, traders? Am I not right about keeping it simple? That wasn't difficult analysis. We watched about 9 indicators, simple average indicators that everybody on the globe follows, and we draw trend lines. We hit the resistance. We thought it would break. The indicator said it would break, and down it went. That's the S&P. Same thing now that we are on the downward slope. You could easily get to that support line that I pointed out to you. Traders, that's not very difficult analysis. It's something you can easily learn to do. If you're uncertain how to do that analysis, come on down to www.livewithoscar.com. Jump into the chat rooms. It's our trading academy. It is where we teach many, many traders how to view the charts, how to apply the analysis towards trading, and how to get the mental state that you need to be in to pull the trigger. Traders, I know one of the hardest things to do is come up with a trading plan and then pull the trigger on that plan. Many traders I know come up with a plan, then when the market's open, that plan goes out the window and they trade the seat of their pants and get hammered. You have to come up with a plan, you have to trade that plan, and you gotta pull the trigger when the market hits your levels. I can really, really help you with that. If you come on down to my site, if you are a professional and you join the premium room, I can certainly help you with that, traders. Many, many traders are in my premium room specifically for that reason, because they've had trouble pulling the trigger, they've had trouble getting out when they should get out, and they've had trouble letting profits run a little bit. These are some of the many things that we will teach you if you come on down to our Trading Academy. Now, traders, one of the things I never really mention in these videos, but I will mention it today, I am a broker, traders. I can be your personal broker and trading coach. If you open up an account with me, which you can simply do at my site right online, I can watch over your account, I can help you get orders in and out, and I can see where your trading is going maybe a little bit wrong and help you get that more in tune. In fact, there's so much I can do for you as your broker, so if you'd like for me to be your personal trading coach, come on down to the site, open up a trading account at Dorman Trading, and I will be there to help you at every step of the way in your learning. Traders, I know right now many of you are getting chopped up out there. How many of you can't use a 26-plus year veteran analyst in your corner on your team? I'm sure you could use a guy like me on your team, so come on down and allow me to help you. What we do here is we help many, many traders every day, traders. So come on down and see what we can do for you. If you'd like to give me a call anytime day or night, 702-629-4755. What am I hearing? What, there's a birthday in the house? Oh, wait a minute. Stop the press. We got a birthday here. Mikey, serious 22. We have a 24th birthday coming up. I think it's appropriate to do a little birthday song. What do you think? What do you think, Michael? Happy birthday for you. Why don't you come on up, man? Come on up there. Come on up there. Let's do some happy birthday for this man. Are we ready?
Yeah. Ready.
All right. Happy birthday to you. Happy birthday to you. Happy birthday, dear Mike, Series 22. Happy birthday to you. Now wait, what's a birthday without a didgeridoo? Happy birthday! All right, another birthday in the house, baby. All right, traders, listen. Keep your emotions out of trading. Be really careful out there. Make sure you have your stops in at all times. A stop is your best friend. And remember, don't fall in love with the upside no matter what happens on the upside. Those upward moves are to be sold because they keep coming on back down. Okay, traders, keep your emotions out of trading. One of the best ways I can tell you to do this is to say this to yourselves every morning, every afternoon, every evening, and you know what that is? Stops are in! Emotions are out! One more for you, Mikey. Are you ready?
Ready.
Woo! We're out of here.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.